Yes, boys. Good morning. Right, so today we're going to do GBPUSD trade. This was a trade from yesterday. Today's the 10th. Yesterday was the 9th. Obviously, it's how fucking numbers work. But we had a beautiful trade really on GU. I love DXY yesterday, man. DXY was lovely. If you guys was active in the Discord, you saw that I was sending them multiple times this same level here, this 1 hour fair value gap. And yeah, as you can see, this is today. But obviously you can see that price has dropped off significantly since coming into that fair value gap. And this was sort of the main reason why we actually did get why we did get in on the trade. It was a beautiful trade. Let me show you. I'll show you the whole setup in 2 secs. I just want to go over DXY. DXY is mainly what I want to go over, to be pretty honest, guys. Right, cool. So essentially, let's move the market back to when to where we was. Okay. No, not allowed. What's going on here? No. Okay, never mind then. Right, cool. So yeah, we wanted price essentially. So yesterday morning we was around here. Okay, so we was around here yesterday morning as soon as we jumped off from London, and then as soon as we come into London, we had that lovely push into that 1 hour fair value gap from DXY, and that was perfect. That's exactly what we wanted to see straight away. We're above the new week opening gap as well, above the prior day 50%, above the daily open, not above the prior week 50%. But I mean, to be fair, that makes sense. It was Monday. Monday doesn't always have that. Monday doesn't always have that sort of push above weekly equilibriums, just because it's weekly, and literally that was made last week. And Monday, you're not really going to be mitigating or going above or below, depending where the market is at a given time, realistically on Monday, because Monday is just the first day of the week. Couple days down the line, we might come above the prior week 50%, and then but the weekly equilibriums are more for later on, like prior week high, prior week low. I mean, by the looks of it, we're taking a prior weekly low anyways, but we normally will take those weekly liquidity points or equilibriums sort of later on in the week, purely just because of the fact that the market has not yet developed into the big moves to push into the weekly equilibriums or the liquidity points. So we use this fair value gap as our main distributor, realistically, our main reversal point. As you can see, it worked out beautifully. Going on to GU, so this is where we actually had that trade. I love this trade because we had the accumulation just before we had that distribution from the New York session. And obviously, from there, we was able to capitalise on a fucking lovely trade. Also had the new week opening gap on our side. Exact same thing as well, boys. Friday 50% was below that. Daily open was below that. So yeah, beautiful place to be buying it realistically. Plus we come into the 1 hour fair value gap, okay, which was bang on aligning with DXY. Boys, this is I disclosed this yesterday. I gave this as a little note after my after I sent in my trade. But if we have wicks that pierce through the fair value gap, it does not matter. As long as it's wicks. If it's body, questionable. I would actually disregard the fair value gap. But if it wicks below, it's still fine. The main reason is because it doesn't need to be perfect. The actual fair value, the reason we have fair value gaps is so we can build up liquidity in the markets. It doesn't have to be bang on. All the blocks is different. Because all the blocks is institutional traps orders, that needs to be exact. That will come into the POI, mitigate and leave. If it surpasses, okay, then we know that order block is not valid. But with fair value gaps, we can wick below and still have that distribution in the opposite direction. This is a perfect example of that. So we pushed down into the fair value gap, had a fuck around, pierced for a couple times, but then actually come up on top and then sort of distributed to the upside. As we got into New York session. And the reason why we had the last little pump down was so we could sweep London's liquidity, okay, in order for us then to push up and then obviously have that distribution move which we wanted. And that's exactly what we got. So that liquidity grab there, and as you can see, we had that distribution there. So this would have been sort of more of a New York trade than a London. But London was accumulating heavily yesterday. As you can see, actually Asia moved more than London yesterday than London did Asia. As you can see, poor. But that's cool. What can we notice from that? Cool. Step away. Don't enter any trades during London. because we were accumulating. The only thing is there was US bank holiday, so you probably wouldn't have took this trade. But we still had a beautiful fucking setup on this. Absolutely beautiful. Right, let's go to the 2 minutes. This is where we iron up. So we had that change of character this high here on the 1 minute. Okay, and then we're looking obviously at this range here. As we can see, we got a few POIs. You could have gone for the fair value gap. I went from the fair value gap. But I also obviously had this order block marked out, but I did ignore it. I do love fair value gaps. Fair value gaps are my main way of entering. I absolutely fucking love them. Right, so yeah, we had the stop loss at this low here. Because this is the range we're trading within. Round that to 4 pips. As we know, we've got a minimum of 4 pips stop loss, boys. We don't know assholes going in on yourself. And then you could literally, there's a few TPs here, which I love. I love it when you got an option of TPs. It makes it a whole lot fucking easier to actually aim for something. So it not only had London high, which we know was an accumulation phase, so we know price will definitely take the high as it took its low, because it showed the accumulation within London, the build-up of orders and the build-up of liquidity was perfect for us to take, and obviously take that manage. And then another point of TP we could have easily had, there was a fair value gap here. So we could have also aimed for this fair value gap, which I would have probably had my final TP here. This was your fair value gap. So let me just mark that blue so we know it's a fair value gap. And then you could have had a TP. So TP there, took a little position, and then your final hit. Lovely 8.3. Look how quickly that hit TP. Oh, that bear at my knee. Fuck. Look how quickly that hit TP. Very, very fucking quickly. What, in what? 45 minutes? We've hit TP. Easily done. Fucking hell, mate. What have I done there? But capitalising in the situations where price is not giving us anything. So, boys, one thing I want you to take away from this, I've still got some more stuff to explain on this chart, but one thing I want you to sort of get in your head on this is the accumulation phase, okay? So I want you to realise that you don't have to rush into positions. You will never, ever get your position straight away. There will always be one final thing that you need to be knocked down on before the market moves. And what is that? That is liquidity. So look for the accumulation just before you've had a distribution, okay? Of realistically, you want to catch it beforehand. So you want to be quick and sharp with it. So you want to notice an accumulation before price takes the liquidity, okay? And I noticed this yesterday, and look, boom, took the liquidity and capitalized to the upside. So it's all about knowing where the accumulation is, where the liquidity lies, and where the liquidity is going to be taken, okay? And because I know where the liquidity is going to be taken, boom, I've got my entry. And because I know where the liquidity is, boom, I had my TP at the height of this accumulation, okay? So there's bundles and bundles and bundles of different ways that you can use your TPs, but the absolute best, in my opinion, are the points where there is liquidity pool above. So we know there's liquidity line above these highs. We know that for certain. We know that. So we need to capitalize on that, okay? So we know we got liquidity at this point here. Let's turn this magnet off. Fuck off. So we know we got liquidity above these highs, okay? Also got liquidity above this wick here, okay? Also got liquidity this wick here. And all this is all before we got our entry, okay? So we know we've got liquidity to the upside. Plus we know we've got fair value gap here, so we know we've not only got liquidity, we've not only got an accumulation phase, we've also got fair value gap above. We know we're going to be taking them out, so we need to be getting on a buy there, and we need to be getting in on a beautiful position. And the way we get in is by waiting for the low liquidity to be swept before we can actually get into the trade. Because you don't only get in the trade here and then realise that you got liquidated because you didn't realise that there was liquidity to the downside. Even though you may have acknowledged that there was liquidity to the upside, you've got to acknowledge liquidity to buy side and sell side in order to capitalise, boys. But yeah, amazing trade, man. Fucking easy does it, boys. Literally easy does it. And that's the thing. Look how quickly we moved up as soon as we come into entry. As soon as we come into... Not as soon as we come into entry, but after we come into entry, boom, we distributed up massively quick. Look at that, bruv. So we TP'd in what? 24 minutes, boys. 24 minutes, you're in 5%. Are you fucked? That is lovely. By the way. But yeah, that's, boys, that is absolutely perfect. That's what you need to do. You need to realise liquidity needs to be taken, okay? Liquidity needs to be taken in order for you then to get in on your positions. and it is very important. And this is a prime example here, lads. Prime example here. So we've had the accumulation phase, all right? Okay, so we know we've got liquidity to the upside and to the downside. Oh, sorry. But what we need to acknowledge now, okay, is where price is going to take. Is it going to take the low or is it going to take the high first? But if we go into the 1 hour, we've got a lovely fair value gap to the downside where price is actually currently trading within and is building up liquidity within. So maybe we can take the low and then push up. That's exactly what we've done, lads. Exactly what we've done. Textbook. So utilising higher and lower time frame important. Utilising liquidity pools and liquidity sweeps very important. And identifying a few different TPs is smart. It's not important, it's smart, okay? You don't have to use different TPs, but if it's better for you in regards to your psychology or in regards to your trading plan, or you capitalize more when you have more TPs, or you capitalize when you have less, doesn't matter. Whatever it is, you do that, okay? So you need to be making sure that your strategy is strong as fuck, boys. Strong as shit. If you don't do TPs, absolutely fine. Never do multiple TPs then. Never do them. If you're going to say you don't do them, okay? Stick by that rule that you've given yourself. If you want to do them, be smart with them, okay? Don't just put random 1 to 2, I'll take some out now. 1 to 3, I'll take some out now. Use highs and lows. I mean, we had a specific one where we would wait for 1 to 2 RR, and then we look at the next high or the next liquidity pool or the next fair value gap in order for us to take a little bit out. We wouldn't really take out for no reason. Do you know what I mean? There'd always have to be a reason. What the fuck is this song? Turn that off, man. But yeah, beautiful trade, boys, okay? But yeah, remind yourselves to look at the DXY. DXY, bro, why is Ice Spice and Cardi B playing, bro? But yeah, utilising the DXY also, so looking at your indexes is very, very important, especially trading USD. The DXY is literally very easy to analyse. And as you can see, what the fuck? So as you can see, you could have capitalised easily on GU and easily on EU, okay? And we had the exact same thing happen. I mean, but the thing is, this is why I didn't trade the EU. We didn't actually take the low. We didn't take the low in New York and have that distribution to the upside. So there was no entry model there for me, okay? You could have still got on. Still could have definitely got in. But we didn't grab that liquidity like we did on GU, so I wasn't really feeling it. Why is Ice Spice playing, bruv? On a serious note, like, why? It's a fucking horrible... Is it even Ice Spice? This ain't even Ice Spice, is it? Just another whore. Right. So the POY you could be looking at, put this magnet on. Fucking Ice Spice, man. Stupid whore. Right, I've got that lovely 15-minute there. You could have gotten a nice buy there, but like I said, I wanted that liquidity to be taken. GU definitely had a nicer setup than EU, hence why we capitalised on that. And you could have had a massive TP, really. But yeah, it was beautiful. I've really, really liked the intro. But that's the thing. What have we utilised there? Let me write down the things that we've utilised. So, come on, bro. Stop fucking around me. You can't. I can delete it. Fucking hell. Hate when it does that. Higher and lower time frames, liquidity pools and liquidity grabs. DXY, the index as well. What else have we used there? So we've used equilibriums. We knew we was below those. So we've used equilibriums there. We used fair value gaps. Higher and lower time frame. So bear in mind, I'm using multiple time frames a lot in my analysis, boys. I'm looking at liquidity on the higher and looking at liquidity on the lower. Very big things, okay? So I've realised that I'm looking at higher and lower all the time. I'm always flicking back through, okay? Very important. Very fucking important. What else have we used there? Let's have a look. Let's have a look back on the trade. So we've used a new week opening gap as well in our favour. So we know we wanted price to come back above the new week opening gap, and actually successfully fill the whole thing. Now we filled the whole thing. Here, fill the whole thing here, so we know that it was completed. But we obviously had to have this move before we had that filled the new week opening gap. Yeah, higher and lower time frames analysis, but. Liquidity pulls, liquidity grabs, dicks, white index, equilibriums, fair value gaps, new week opening gap. But yeah, I mean, essentially, there is so many things that go into this trade, but very simple things. Things that are very easy to notice once you've actually learned them a decent amount of times. We'll just keep those ones there. There's probably more. But I'm not going to... I don't know what the fuck that was. But there is a good few points here which we're using different types of trading. Bro, what the fuck? We're using different types of trading in order for us to actually get in on these trades and actually get a better analysis than what we was getting before. But yeah, bro, what the fuck? Oh, that's annoying. All right, boys. Right, yeah, other than that, that's it, boys. A beautiful trade there using the DXY and the GU as well to actually get on a beautiful trade. Boys, that's another case study. I'll be doing another trade.